So we go from 1913 to the World War era. Greater than 90% of the people in the United States never filed a tax return, never paid a tax, never had anything to do with the Internal Revenue Service. It wasn't until 1942, when Congress needed money to prosecute World War, that they made that tax, the income tax, which was now pretty much ingrained in at least in high income society by that time. They sold it to the American people as a tool necessary to prosecute World War. We have to have money to fund all the things that the United States is doing to win this war. In 1942, the Victory Tax Act was passed, and that was the first time the federal income tax reached down into the pockets of the average American citizen. Jane and Joe American, for the first time, were touched by the income tax. So this thing has been on the books for 30 years by the time any middle class American or lower income American ever had to deal with it. And by this time, the tables flipped. Whereas 90% of the people didn't file a tax return up until this point, now 90% are filing tax returns. And I'll tell you, Joshua, once Congress got its hands on that money between 1942 and 1946, the budget of the United States, or I should say the revenue to the United States, skyrocketed because of that tax.